The average home price increased by $42,000 in the first month of 2022. Hello and welcome back to the Vancouver Life Real Estate Podcast and YouTube channel. Today we are talking about the numbers, the data, what happened in the first month of 2022. Basically didn't skip a beat. Things barely slowed down in December and they have taken off in January. I will say firsthand, our experience on the ground right now, it literally feels like a peak March, April kind of season. It feels very unnatural for a January. Everything that we're going into is putting the gloves on because it's a fight. And what I mean by that, of course, is you're competing in multiple offers on basically every property across every area. So much so I'll even share it off the top here. I went into a three-way multiple in Prince George last week, trying to buy an investment property for a client here. So that's a bit of an indicator of how it all looks. We'll just jump right into the data here and then share, I think, a couple more anecdotal stories because it's pretty fascinating, terrifying even what's going on out there right now.
Mm-hmm.
So first off, we're going to talk about sales volumes. 2,285 homes sold in January. It's a bit down from the year before, about 4.5% less homes sold than January 2021. And even more so, it was about a 15% drop in sales from December. Pulling back, seeing a bigger sort of overall image of what that means. Last month's sales were still 25% above that 10-year January sales average. So really elevated sales overall, but dipping from last month.
Yeah. And Dan, do we want to jump into like anecdotal stories right away, or should we wait until the end for them?
Save it for the end.
Because I do want to touch on specifically maybe where some sellers' heads are at right now. And I think that's also why we're seeing lower inventory, but we'll touch on that later. Okay, well, let's get into new listings. 4,170 new listings in January. That is a roughly 7% decrease compared to January 2021. And a whopping 114.4% increase compared to last month. Again, I think that, Omicron, Christmas, holidays, there was a lot of things that were that shut down last month comparatively, right? So, but that being said, new listings, they're decreasing at a higher rate than sales year over year. And that's really more terrifying than 114% rise in anything. If we have new listings, it's just decreasing and at a higher rate than sales are taking place, then people are just not putting their place on the market. They just have nothing to buy.
That's just it. And this understandably is feeding more and more into this inventory issue that we have. And we've been saying the word crisis for a while, and it certainly continues to feel like that out there. There's about 5,660 active listings in January. That's almost a 32% decrease from last January, from 2021. And
holy cow.
And
that's
last
in
January
1 year.
was tight. Yeah. A third of the inventory almost disappeared compared to where it was at last year.
Wow. Jeez.
It is up just slightly, about 8% from December. Somewhat, expected, but that's a really low amount because you got to think a lot of people delist in December to relist in the next year. If of course they're sitting on a stale listing. So really thought we'd see double-digit increases, but only 8.2% compared to last month.
Ugh.
That's only an increase. There's only 427 new listings that hit the market last month.
And there was 400.
There's more listings. Total inventory count only increased by 427.
I can tell you more than 427 new buyers hit the market in last month.
Certainly felt like it. And let's remember here that to hit a balanced market, you need about 16 to 18,000 units on the market for prices to basically flatten out. Okay, we're a third of that right now. And again, we only increased by 427 last month. Do you know how many months you need to increase at that rate before you hit 18,000 homes?
I don't know, but I feel like
It's years. Let's just say that.
Fair enough. Yeah.
Funny, not funny, of course, right? Like these are scary how far off we are from a balanced market here.
Mm-hmm.
This is the lowest January, I believe, on record as far back as the data goes, at least 20 years for sure.
Wow.
So we came off of the lowest December on record, and now here we are sitting at the lowest January, basically on record here. Um, yeah. Now, February 2021, if we look back just, 11 months now, that was the beginning of the fastest property rate appreciation that's ever been recorded here in Vancouver. And that set off with 32% more homes on the market.
Wow.
So the reason I'm saying
Wow.
that, yeah, is we are in an environment 1 year later that is even tighter, and we're seeing prices increasing at a faster rate, which we will get into shortly.
Yeah. I mean, theoretically speaking, the less you have of a sought after asset, the more valuable the asset's going to become, right? I mean, that's basic economics, and that's taking place on a massive scale here. um, anyhow, um, let's talk about the sales to active ratio. Again, the behavior in the market, right? 40% sellers market right now. That's actually down about 11% from last month. And again, even though we're down 11%, it certainly doesn't feel like it. I somehow feel like maybe it's not really reflecting the amount of buyers that are I think with such a low amount of property on the market, such a high amount of buyers, it's just not representing it properly anymore. Then you've got 28% for detached homes, so still in a good seller's market there, at 51.6% for townhomes and 49% for apartments.
That's worth talking about.
Yeah, I mean, we're talking here. Townhomes have slid a little bit from the month before, but I mean, again, I just think that they're just there's no inventory of these things. So if there's less selling, then these numbers are going to be lower by comparison, right? But the apartment number has shot up, which is interesting.
Yeah, it's been at or over 50 for 3 months in a row now. 50%
Yeah,
ratio.
yeah, and that's a huge trend, right? So now we are well into a seller's market on apartments. So, Dan, why don't we let's touch on price a little bit here because that's what everyone's wondering.
Okay, so prices last month or as of this month, the average, or sorry, not the average price, the HPI price, as calculated by the real estate board, hit $1,255,000 last month. This is an 18.5% increase from 1 year ago. As no surprise, this is once again an all-time high. So when looking at it from the HPI standpoint, prices have never been higher. Um, what is very important to notice here as well, it was a 2% increase from December.
Wow, that's
2%.
huge.
$25,000 increase in 1 month. Uh, December was 1.6%. So let's think about this. We just talked about how there's an 18.5% increase in the last 12 months. Well, we
Mhm.
just saw a January that did 2%. January, for reference, last
Yeah.
January was 0.9%.
Wow.
So it has more than doubled the rate from last year. So, imagine this continues 2% a month. That would be a 24% year. Um,
Yeah, that's bananas when you consider the fact that 18% or 18.5% was such a huge number to begin with, right? To the fact that we'd be, almost 6% higher than that this year. I mean, again, I mean, interest rates are going to be a factor in that for sure, but the overwhelming pressure from supply and demand, I think is still just going to continue to push the price here. I think this is a much bigger issue than even just an interest rate hike, right? So,
yeah, definitely. And especially one that won't be substantial. They're not going to come
correct.
out and raise a full point, for example.
No,
They're not.
no, no.
Um, so basically, everything that we're seeing right now, the rate of appreciation is accelerating
Wow.
right now. Like I
That's
said, a 2% January is not healthy. Okay, but let's look at the other metrics here because we like to dissect all three price categories to kind of give a real sort of full open world projection here or look into it. So the median price increased by $14,000 last month. It is now $924,450. And
wow.
guess what? Median price as of January is a new all-time high. Uh, that is beating out the previous record seen in April of 2021. It's 3,000 higher than that, and it's up 25 grand in 2 months.
Oh, holy cow. So it's accelerating.
It is accelerating, just
Yeah.
like we talked about there with the average for the month of January. So, okay, so let's talk about the average price as well. 1,282,000.
Wow.
That number, the average house is up $42,000 in 1 month in January. And guess what? That is an all time high as well. So, all three price metrics are all time high right now.
So if we break that down into actual asset classes, we break it into single family, apartment, and townhomes. For single family, we had 622 sold. We had a decrease in volume by about 16%. Again, I think that's a direct reflection of supply. Price, my goodness, Dan, 1.953 million is the price for your average detached home in Vancouver. I mean, at this pace, we are going to hit 2 million by March. And then what? It's a staggering number. And at times, it kind of feels a little out of control. Starting to feel that way. I kind of have to say it. It's,
Mhm.
um, I think everyone's probably thinking, looming. Are we having a looming correction coming at some point here, right? And maybe that'll be the case, but it won't be quickly, and it won't. It'll take some time. And honestly speaking, I think there might be another 10 to 12, maybe even 15% increase until that takes place. There's so much momentum behind the price right now. It's incredible. 22.7% increase in price from this time last year, 23% on single family homes. That's a humongous number, right? I mean, if we round the number to 2 million and then drop it down to 20%, you're talking about a $400,000 gain on the average home in Vancouver in 1 year. Anyhow, this is a 2.2% increase compared to December last year. Again, that's a staggering jump per month, right? That puts you above 24% by this time next year, which again, I don't think is going to happen, but still the projection is oof. And I say that for buyers, it's very, very difficult. And sellers right now are just they're getting it too, because they're feeling like, hey, if I sell my house, I'm gonna have nothing to buy. So instead of selling it, I'm just not gonna put it for sale, not until things calm down, right? Anyhow, so let's talk apartments. 1,315 sold. This is a 10% increase in volume compared to January of last year. Price $775,700, which represents a 14% increase in price. Sorry, I said 10% in price. I meant 10% in volume and 14% in price appreciation. This is the highest we've seen in a year. And honestly speaking, these things seem to be accelerating too. 1.8% increase in price compared to last month, right? So staggering price appreciation per month taking place with apartments. Still though, the winner in terms of most appreciation goes to townhomes. 348 sold, a 23.3% decrease in volume compared to this time last year. Again, that's supply numbers, generally speaking. Your average price for a townhome is now $1,029,500. Dan, I remember when they were in the sevens.
Mm-hmm. Yeah.
And it was
Last
not long
year.
ago. Yeah. 24.3% increase in price in 1 year. And on top of that, 2.5% increase in price compared to just last month. Wow.
It's almost
So
28,000 bucks right there
yeah.
in 1 month for a townhome.
And people think, well, maybe I don't know if I want to pay $50,000 over. And in 2 months, you've made it back.
Huh. Yeah, interesting way of looking at it. I was just thinking lots more here about this inventory crisis we're in, and I wanted to jump back to 2008, or
Hmm.
the global financial crisis, because that's the last time we really hit, I think, a seller's market for a few months there. And for
Buyer's market.
Thank you, sorry, buyer's market. It's been a long year already.
Yeah.
um, for reference, and maybe this can instill some hope in some people, and maybe the market overall. December 2007, there was about 8,200 listings on the market. Okay, so very much a seller's market. It took only, and yes, this was caused by the global financial crisis, but it only took 7 months for that inventory to jump to 20,000.
Whoa.
So it can happen. Now,
Yep.
we aren't, well, maybe we are about to enter a new GFC here because of the position of debt in this country, but that's kind of how quick things can change. We
Yeah.
have
And
seen it.
conversely, out the other end too. Um, After the end of 2008, it only took, I think, 12 months to be fully recovered from the bottom of that correction, right? So
Hmm.
if these buyer markets do come by, they typically come again. I think when you look at that, to me, that speaks to behavior. Really, at the end of the day, the market forces were still there, right? As soon as people felt comfortable getting back in and trying to buy something, once they understood the financial position they were in, things resumed. And the same forces and pressures that were already there were present again. And so, like, what I'm saying is that if there is an interest rate hike and you do see a behavior pause, it should really be your time to strike, because it's not going to be too long um, before things come back to the conditions that they're in.
Yeah, Vancouver, time and time again, if we look at the price cycles through history, rarely passes more than a 15% decrease in
Mm-hmm.
price during that downward cycle. And like Ryan said, it often takes 12 to 15 months max for that to come back.
Yeah.
So it's like, and we share this with our clients all the time. It's like, look, if your home value drops by 15%, so do you have to sell? Of course
No.
not. You can
No.
just keep living in your house.
Yeah.
And again, if you enter the market with, let's say, a minimum 5 to 8, ideally longer time horizon with your vision of staying in that property, you're going to weather the cycles. It
Yeah.
doesn't matter what the market does. You just live in your home, enjoy paying down your mortgage, and sell when it makes sense for you to sell.
Yeah. I mean, ultimately, I think one of the reasons why we speak so shockingly, or end up laughing at some of these ridiculous numbers, is because real estate really is a long-term game. It's not a short-term pump. And we're seeing, incredible gains in a short period of time that you would typically see amortized over 10 or 15, 20 years. So, I maybe Vancouver is a bit special in that respect. It certainly has proven that it is over time. But generally speaking, um, the appreciation we're seeing right now is really fast, really fast. And again, I think that that's a function of neglecting supply, increasing immigration, and then not really having a housing policy or plan to deal with the changes that are taking place in Canada.
And
And
continued access to cheap credit.
add that too. Yeah, pouring fuel on the fire.
Right? They
Yeah.
have not tightened really the access to mortgages right now. Sure, a little bit on the fixed side, but still, we're seeing obviously new mortgage rates, or new mortgages, excuse me, increasing at the highest rate they've been, I think, since like the 80s.
Yeah, I mean, I can speak to two anecdotal stories, right? One as a seller and one as an investor, right? For the first, I'll start with the seller who wants to sell their property, but is terrified of selling their property because they have no idea if they're going to be able to get back into the market, find something that they can live in. And I mean, we're talking about somebody who's trying to make a 10-year decision here, right? So they have to find a home that's going to make sense for them. They can't just buy, you know, whatever's left on the market, right? And so the problem with bringing more inventory to the market right now is that these sellers don't want to do that. They don't want to bring their property to the market because they don't know what they can buy. They're not even comfortable, even though I'm reassuring them that we have the strategies and the skill in place to do it, and I believe that. But the market conditions are really influencing sellers as much as they are buyers right now too. and not in ways that most people think. Furthermore, and to Dan's point here with respect to the credit, um, I have a client of mine who sold their place here last year in May, moved to Toronto, bought a home in Toronto. Um, they've been in Toronto now for 8 months, in Brampton. Sorry, not Toronto, Brampton. And their home has appreciated roughly $200,000 in that time frame. And as such, they are now refinancing because they can. There's been no interest rate hike. So why wouldn't they? If you're playing the investor game, right? So they refinance their home. They go from a 1.29% mortgage up to a 1.336% mortgage, like a very minute change in terms of cost. Pull out, $200,000 or $180,000, and they're going to go buy a presale with it. And that's another way of taking advantage of the interest rate position that they're in, the low mortgages, the access to credit. And if the government doesn't change that, investors they're smart about it, so they're going to go and take advantage of it. And that's a policy decision, right?
Great
Anyhow,
story.
yeah.
Okay, so here's one for you. Days on market. After 3 months of being pinned pretty close to the bottom at 11 days on average, it just got lower. It's now 10 days on average. That's how long it takes to sell a home in Vancouver on average across the board.
So an
So
average home, Dan, that costs nearly $2 million takes 10 days.
that is correct.
Wow.
Yeah. And so we're seeing the sale pace accelerating along with the price appreciation rate. Everything's getting faster and tighter and tighter. It's just, it's so extreme, and it just feels so unhealthy and unnatural right now. And it does feel like this thing's about to break. It is just so accelerated. It's just running on red right now.
Yeah, I mean, when you've got, like I said, homes that are going up 200, or at least you can have access to credit in north of $200,000 in 8 months on a property that you just bought, it's kind of scary.
Yeah. Per foot is an interesting one here too. So the average price per foot for a Vancouver home, $857. That's up $54 from just last month. And yep, it's a new all-time high.
Wow.
7% increase per foot average last month.
Dan, sometimes I hate it when you're right with your stats.
Eh, it's, well, yeah, these are numbers I don't want to be sharing much longer. Like these are,
Yeah, I mean, we did call it 6 months ago that, prices would be increasing towards the end of the year. We called it again, and here we are seeing it, right? And it's, anyways.
So one more metric that's getting even crazier too, the percent of sale price to list price. Everything's selling above list price on average by 102.8%.
Wow.
That's increasing as well, because that went up 1.2% from the month before. That is the third highest all time, just behind April, May of 2016, which was the previous peak. So every metric right now is pinned to the top, every single one. And a couple more stories here. I'll share one that just happened here over on Hastings Sunrise neighborhood. One bedroom condo, 29-year-old building. It had a brand new envelope, so it was in good shape. No outdoor space. I think it was about 600 square feet and some lipstick renos on it. This property, the previous highest sale in the building for a very similar unit was $480K, and that happened in June of last year. So jump forward to this, or to January, about 7 months later. This one listed for 519.
Appropriate list.
Somewhat, yeah, for sure, right? Another 40K over that.
Yeah.
6 offers, 5 of them subject free, sold for 131,000 over ask, selling for $650,000. That's 35% higher than the previous comp 7 months ago. And this is Hastings Sunrise wood frame. You can spend that same money and go to Olympic Village and get into a concrete high rise with a view and outdoor space for the same price.
Or maybe you could have.
Well, I had one under contract last month, so
Yeah.
I'm talking verbatim here.
Yeah.
So,
it's kind of crazy because you've got people who, remember that, Dan, we put some people out in Maple Ridge who ended up buying I think
Oh
3 years
man,
ago,
Jesus.
right? I think they got into some single family homes out in Maple Ridge in the 700, 750K range kind of thing.
Hmm.
3 years have gone by and these homes have gone up a whopping 92% in that time frame. I went and looked it up because I couldn't believe it.
Hmm.
Roughly 1.4 million is what these homes are now selling for 3 years later.
Yeah.
So, I mean, I get population explosion and all of that, but we are so systemically undersupplied for the amount of people who can buy real estate here. It's crazy. It's
Yeah,
crazy.
terrifying stuff. Okay, so let's maybe give a little bit of prediction of what's happening next. What can you expect in the next 3 to 6 months? Um, I'll start by saying, yeah, I think it's almost a sure thing now that the March announcement from the Bank of Canada will be a rate increase, and we estimate it to be just a quarter point. That while it'll only have about a 2 to 3% effect in your purchasing power, it will have a psychological impact because, of course, it's the first increase
Mm-hmm.
in, gosh, what is it? I mean, like 5 years.
Mm-hmm.
So, um, what that will ultimately do is cause a bit of a panic, I think, and it's going to have a rush to the market. So people are going to go, okay, things are going up, things are getting more expensive for mortgage purposes. Let's go get in our rate hold now. That'll be about 90 days on average, and you're going to just see an absolute buying spree happen during that next 3 months. And in this marketplace, with this continued record low um, inventory, and with all the other metrics that we have pointing up, I'm sorry, but prices are going to continue to go up for at least the next 3 months here.
Mm-hmm. And I also think, largely, I think the interest rate hike scare, if you will, was in January. I mean, I think a lot of the markets reflected that as well. They, baked in a lot of the correction, thinking that the Fed was going to increase rates in January. They didn't. They held. And now I think, especially in the markets, we've seen a correction that's taken place there. So I think even if there is a interest rate hike in March, which I'm sure there's going to be, um, I don't think too much is going to change because I think a lot of that's already taken place. Um, Short of what Dan said, unless there's a bigger increase, right? But I don't think we're, again, we've got these overwhelming pressures on housing right now. Um, it might change the behavior, I think, honestly. And the worst part about interest rate hikes, generally speaking, is that it affects the people who need the credit the most, right? So people in your $400,000 to $600,000 price range are going to be the most affected by a 2 to 3% purchasing power haircut, not the people who are trying to buy 2 million, right? So that's the sad part about it, but it's an unfortunate reality that has to take place in order for this to slow down.
Yeah, and you know what else has kind of popped up in just this last week, and really for the first time, at least in my ecosphere in the last few years, is I've had 3 stories about people, their clients, not getting their properties appraised at the purchase price.
Yeah,
And I haven't heard that in a while. And I get it. I mean, like, let's take both those examples we just talked about. I mean,
yeah.
you take this Hastings Sunrise and the appraiser goes in and goes, okay, 7 months ago, 480, and you're at 650. Is the bank going to appraise that? Maybe not. And of course, the inherent risk there is for the buyer. Uh, you have to cover
Exposed.
any spread
Mm-hmm.
that is under the sale price to the appraised price in cash. So that can sometimes be big numbers, especially if we're talking about Maple Ridge detached, going from just a few months ago 1.1 I think was common, then 1.2, and all of a sudden it's 1.4. Is that 50 or 100K higher than it might appraise? Maybe. And we get the fever that some people have, that they have to get a house, or maybe they've lost 8-10 times and they just have to throw out that crazy number just to get in. But if you're in a position, just be careful and don't overpay for something. And if you can't afford that potential spread risk,
So, on that note, Dan, do you mind if I put you on the spot?
please.
Okay. I'm a buyer entering the market for this first time, and I have the luxury of buying now, or I have the luxury of buying in a year from now. What would you tell me to do?
As long as you are going to live in that home for 8 or more years, just buy now.
Mm-hmm. Okay, and that's the right answer, I think. The other answer I would offer would be you should be looking at pre-sales. Um, because at least if you're going to pay a high dollar per square foot, you're going to get a brand new product at the other end. Right. And you've got time in the market with a brand new product for appreciation to take place and recover any kind of expenses that you may have incurred to acquire it. And I think pre-sales are great for that.
Mm-hmm.
That would be really the only other thing I would say.
Yeah, no, oops. And that's a great a comment as well. And I'm just pulling up the pricing here because we had clients, the last peak previous to where we are now was that sort of like April, May 2018. And
Yeah.
then yes, prices dropped, 10% ish, 15%.
Mm-hmm.
And of course now they're well way above that. But again, all of our clients that bought in and around that previous peak listened, they didn't panic. None of them plan to sell within a year or two because
Yeah.
you should not expect to make money off of a flip, let's say, if that's your tightest horizon without doing any upgrades, of course. And here they are now having conversations with us about things like refinancing, getting other properties, or doing a big move up because they just held through that
Yep.
down cycle and now they're way up. So
Well, and we even eat our own advice here. I mean, I bought in March of 2021, right? I made the biggest purchase of my life. And I can tell you that I'm happy to be here for the next 10 years, which is why I did that, right? I didn't make it based on what's going to happen in the next year, although I will definitely keep an eye on it.
yeah, both Ryan and I bought pretty close to the same time, and a couple people thought we were crazy because
Yeah.
they thought, you guys are buying in an overheated market and it's going, it's got to be near the top, whatnot, and here we are, 20% later.
Yeah. Yeah. And again, so when people ask, should I be buying right now or should I not be buying right now? And my point is that maybe this thing does another 10% before it cools, right? And if it goes another 10, 12% and then corrects by 5, you're still up, right? You're still up significantly. And that's just in the short run. So anyhow, anything else, Dan, you want to talk about?
I think that's a great place to end this episode. Thanks as always, everyone, for watching and listening. And we have an exciting one for you next week. For all you investors out there, anyone thinking about property management, anyone want to know what's happening in the rental market in Vancouver, great episode with our colleague Keaton Bessie. Looking forward to bringing you that one. Have a great day.